The markets will climb out of this. You've seen this before. What are you seeing? Is there a sense of sort of confidence or optimism you can provide from your perch?
Yeah, I think the stat that you just posted, when there has been a decline, this is not the first time we've seen this, and the market strongly rebounds 12 months after the decline. We've been through this multiple times in history, and this doesn't feel as pronounced as some of the more pronounced issues we've had, such as the financial crisis. I think your last guest was talking more about the 2000, 2002 challenges we had in the market, and that may be a little bit more what it feels like, as opposed to the doom and gloom that everyone is forecasting. But it's understandable. There's a lot of uncertainty in the market. Buyers are trying to figure out when to re-enter the market, and sellers are trying to figure out, where the bottom is. So I completely understand, some of the sentiment, but we've been here before. We will get through it. And the important thing to know is to stay in the markets for the long term, because they do rebound. We've been through this many times in the past.
Yeah, although I will, and I'll flip my own script, Lynn, which is to say that inflation hasn't been this bad in 40 years. You've got a Federal Reserve that may have screwed it up, for lack of a better term. And of course, you've got national debt at record high. So there are reasons to be concerned. But when you're looking at your business at the New York Stock Exchange, you're in capital markets, you're the advance indicator, right? If companies say we're going to go public, that means they're confident in the public markets. Are you seeing indications that there will be IPOs to come?
We are continuing to see a strong pipeline. We have seen some companies go, particularly in the energy sector, which has had amazing returns this year. We've actually had 3 companies go recently that are focused on clean energy, sustainable finance. And they're seeing really good performance. Behind that, though, we have a tremendous amount of backlog. Companies, their demand to go public, the demand for the public markets is there. The demand to raise capital is there. They're just trying to figure out the timing. They're trying to figure out when the volatility starts to subside. And what does that mean for them raising capital? Is it follow the initial plans that they have, or do maybe they go with a slightly smaller round and then come back to the public markets? But the demand is very much there to enter the public markets, hopefully soon.
It's been all about, obviously, technology, SPACs, and other things for the last, 3 to 5 years, Lynn. You're talking about energy. Energy is down to 4.5% of the S&P 500. Is there enough of an energy pipeline, solar, wind, traditional oil and gas, clean energy, whatever, battery companies? Is there enough of an energy company pipeline left to make up for any drop-off and anything like the latest social media startup?
Well, I think the most important thing that you're seeing is innovation. You're seeing that across multiple sectors. You're always going to see innovation in different sectors. You are seeing it very much right now in the energy companies. We just welcomed NuScale Power to the NYSE. We welcomed Accelerate Energy last month. So we're seeing innovative companies that are solving challenges associated with the energy markets. But importantly, you're seeing a lot of our listed companies, our existing listed companies that are your more traditional energy companies, really focused on the clean energy transition. And they've made a tremendous stride, especially when you look at Chevron, ExxonMobil, Occidental, and their focus. Yeah. So I think it's important to not just, focus on one particular sector, though, because you see a tremendous amount of innovation. And that's really what's driving our pipeline, are all the different sectors.
NuScale, small modular nuclear reactor company, Accelerate, actually a floating LNG company. We had them on the show. Very quickly, Lynn, in 5 or 10 years, can we still walk down to the corner of Wall and Broad and go in and see your folks and grab a cup of coffee? Is there still going to be the physical building there? I talked to a guy at the Milken conference about a month ago who said, no, the NYC is going to go away. They've been saying that for a while, though.
They've been saying that maybe for 230 years. We just celebrated our 230th anniversary on May 17th of this year. In my opinion, the most tech-forward markets, really focus on technology and coupling that with human judgment. And that is 100% what our floor does. It leverages technology. If you look at our systems, they're right now processing 500 billion incoming order messages per day. That's buys, sells, trade information.
Yeah.
The only way that you get a good outcome, though, a smooth outcome, something that dampens volatility, is to have that human overlay, to help you make sense of the data that's going through the market. And when I think about, the role that our floor brokers provide to the market, their DMMs provide to the market, they really dampen volatility. It's why NYSE listed stocks have seen 2 times less volatility at the open, 3 times less volatility at the close this year. It's really helping dampen volatility, and our market model has never been more applicable than it is in today's markets.